let's see. I think in these kind of things, well, everyone can get off on the right footing. I think it's probably fair to say that everyone who would be on this panel is more than likely bullish on the outlook for the product tanker space. If you disagree, please raise your hand. Yeah, I've never had anybody disagree. I knew it. All right, what's your rationale for not being bullish on the product?
I'm not bullish. I'm just not just bullish. I mean, we're extremely bullish on the panel.
Oh, I understand. I should have clarified.
Yeah.
Yeah. So, I think, and frankly, I would put myself in that same camp of being not just bullish, but very bullish. Although, as an analyst, I've come to learn that I'm wrong more often than I'm right. But the reasons are plentiful. Obviously, we have IMO, and we'll touch on a few of those at the moment. But I think one interesting aspect that let's work under the assumption that we're all right and that the market's going to be fantastic. Could we maybe just start with, you guys are all part of public product tanker companies. Why doesn't the market care that things are so fantastic? Does anybody, maybe I'm the person to be answering that question, but does anybody have a reason why you're trading at discounts to NAVs and people just don't seem to recognize the fantastic opportunity that is?
First of all, it's normal. Every time in the last two major bull cycles have been 2003, started then and ended around 2008, and middle of 1984, ending in 1990. And both of those periods, the stocks started off in the same position, that they were trading significantly under NAV, like most of the product tanker companies are trading about 50% below NAV at the moment. And this happened in both of those two cycles. And it's as a result of, whether it's Peter cried wolf, or people just give up, or they never think it's going to come, or they're too hurt. But whatever it is, none of the companies on this panel or the market itself have done anything other than disappoint for about 11 years now. And that's what the market's been in. The market's been in a bear market for 10, 11 years. So what creates the conditions for a super bull market is what we have at the moment, which is tremendous pessimism from the investment community, exhaustion from the investment community, combined with lack of real free cash in the companies. The debt side also is constrained. The shipbuilding is constrained. So you've actually got a 20-year low in shipbuilding orders. So everything is at its bottom position. So this is quite normal, and I think this is also part of the aspect of what gives the people, I think, on this panel that confidence, is because we're looking forward to not just a period of great demand growth, but the supply side is very constrained at the moment in the product side.
Right.
Ben, last year, exactly a year ago, we were here, and again, we were very optimistic on the market, and 2018 was one of the worst markets for product tankers. So that's the reason we're 4 today and not 6 like last year. But investors need to see the upside. They're a bit tired of words, I think, and they need to see the upside. What Robert's saying it's very true. I think Q3, Q4, we will see a totally different. We're already seeing a different market for product tankers, better market, but Q3, Q4 is really a game changer for product tankers, and then we will see a sustainable recovery. And this is what investors need to see in order to get back to our stocks and therefore create value for us as well.
Yeah, I would like to add that also for some owners, operators, balance sheets are quite stretched after so many bad years, and I imagine that some discounts could potentially reflect fears that of future dilutive capital increases if the markets don't show the results that are needed to then have finally healthier balance sheets. So that is also potentially a reason.
So I'm thinking of a movie analogy. So, I think we've all been, watching Field of Dreams, but I think now it's Jerry Maguire. Show me the money, right? Show me the money, show us the results, get a couple quarters under your belt, and then we'll start believing. And that's okay. That's what we're in business to do.
Yeah. So I would agree with all those sentiments, although speaking from the perspective of somebody who is talking to many investors all the time, I think another one of the concerns is that the ship owning community has this tremendous propensity for shooting itself in the foot. And when given the opportunity and the capital availability to participate in an upmarket, there's no capital discipline. And so it's, for a lot of people, I think just something that has now been carved into this category of uninvestable.
But that's just a stupid excuse. I mean, that's the same that we heard in 1984, 85, same as we heard in 2003. Of course we won't change as an industry. Of course we will shoot ourselves in the foot in the future. But right now, the 11 years of a terrible market, the gun's been taken away from us. It's impossible for us to shoot ourselves in the foot right now. You have to have a sustained period of market improvement and revenues and stocks trading as premiums to NAV and a capital market that's functioning not just from the equity side but from the debt side too, to get to the point again where we're going to shoot ourselves in the foot. Of course, I haven't changed. I mean, 20 years ago I said that we're little children, we'll never grow up, and if you keep feeding us candy, we will be sick, and you guys will have to clear the mess up. That will happen again. It's just not going to happen for a little while right now.
Right. So it's about to be Halloween then, I guess. So, although I don't. We'll see. But I can't imagine.
So I'm not going to invest because I'm so worried that the stocks will get to a point where they'll earn so much money and there'll be so much free capital involved, and the stocks would have gone so much up that they'll be able to once again order ships. Is that the reason?
So here is, again, something that I heard from the LNG market 6 months ago. LNG rates were almost $200,000 a day, and the stocks were a little better, but not a lot better. And the reason was people said, if I give them too much money, and we're already seeing a lot of ordering, I can't invest in this for a few years. Like, I have to, I don't want to be the last guy putting the last dollar in. And I think broadly speaking, and I totally think that you could be right, Robert, but broadly speaking, I think there's this fear within the capital markets in particular of, just an unwillingness to chase within the broader shipping community. And maybe that does create the perfect opportunity, right? This panacea effect where there's no capital availability, demand exceeds supply, and there's nothing that can be done about it.
But this is so typical of a market at this point. That's exactly what happened in the last cycles.
Yeah.
And then you get technicals. You get companies breaking 200-day moving averages. You get little things that come in, and you also have, I think, in all of our stocks here, I mean, we've met in the last 4 or 5 weeks so many new investors. We met so many old friends that haven't invested in shipping since 2007. You're meeting generalists now that just, look around. They made loads of money in tech and are working out how long they can continue to pay 50 times revenue for for tech companies.
Well, and I agree, and I think that is something that in part is a function of IMO 2020. And I think I get calls constantly from people saying, hey, I'm a generalist, I don't know the first thing about, I don't even know what IMO stands for, but I've heard that this is a really big deal. and I've heard that product tankers are the way to play it, and I think that is something that, I agree with, but also is now beginning to generate more interest in the space than say if another area, containers or something that might just be a more gradual, natural recovery.
Yeah, I can confirm that. We have met over the last few weeks quite a lot of investors, not so much in the US, but in Europe, in London, and in Italy and Milan. And for once, I was impressed because I came out of some meetings and the investors were, in some cases, more bullish than we were. And we are bullish. So, and that surprised me. And often they were investors who were very knowledgeable about energy, not necessarily about shipping. And they understood very well the refining world. So they understood the implications of IMO 2020 for our industry. We try to understand the refining world. It's a very complicated world, but it is the world which we are very linked to. And one investor told us, I mean, if you don't earn money over the next 2-3 years, forget about shipping. I mean, because it's you have to do well. I mean, and another investor said, we said, I think we're going to have 2-3 good years, and he told us, no, I think you're going to have a super cycle. I think you're going to have a super cycle because now you're going to benefit from IMO 2020 for the next 2-3 years. But then after that, you're going to have the vessels that were built in the last super cycle from 2003 to 2008, they're going to start to become 20-year-old vessels. So you're going to have a much healthier market on the supply side, potentially.
I think this is super important what he's saying. I mean, we went to a refinery conference the other week. And we're having a one-on-one, and these two people came in, and they knew the demand side. They didn't need to go through the demand chart. And this person said, before we invest in you, we just have one question. How are you going to cope with all of the demand for your vessels and the increase in cash flows that are going to come?
That's an easy answer, right?
I mean, it's something I'd never prepared for, right? I mean, you almost wish, like, say, I don't know, have you got any ideas? I mean, that's kind of stunning.
Yeah. To that end, and I agree. I mean, we'll see how big of an impact the IMO 2020 has on the product tanker market more broadly, but. And I think it's to be determined. Certainly will be positive. But out of curiosity, have any of you guys seen any changes today? Are you doing anything right now that is maybe a precursor of what we might see in the back half of the year?
Yeah, 3 things. We're having pretty adult conversations with customers when it comes to contracts at market. They're really quite detailed contracts on logistics, et cetera, which tells us they seriously believe that the market's going to be, tighter. The second aspect is we're seeing them wanting to pay up into the, later positions and go long. And we've already conducted the very beginnings of voyages with a low sulfur fuel, just the very beginnings and starts of that.
Have any of you seen any voyages or anything that you could...
Yeah, no, what we have seen is a lot of interest on period contracts from oil majors and the large trading companies. And in December, we fixed a number of vessels at very attractive rates, attractive relative to the recent history, of course. But what we expect is that these period rates will continue rising because there's a lot of interest, and owners are quite reluctant to give vessels on period right now because they seem to be unanimously bullish about the sector. So the charters will have to pay up, and there are a lot of charterers who are short tonnage and that need to cover at least part of their needs with period contracts.
I'm not sure I want to say very much because our stock is up over 6% today. So
Wow.
anything I say could work against us. But joking aside, I think what's interesting is what we're not seeing right now. So we're going through very heavy turnaround periods in the U.S. Gulf and then soon to be in Europe, with refineries going into extended maintenance to make sure that they can run as hard and fast as they possibly can next year or from mid-year to fully benefit, and also to, probably a lot of upgrades to take full advantage of or mitigate the downside for them when the fuel switch happens. And so in spite of that, what we're not seeing is a weak rate environment. I mean, MR rates are up in the mid-teens. We thought they would be quite a bit weaker by now for that reason, because we're in a lull period before everything really kicks in. And I think that speaks to the fundamentals in our business are quite strong. And I think if you look at underlying demand growth, it's driven largely by oil consumption growth, which is very strong. You match that with continued and really this year record refinery expansion, mostly in kind of trading-oriented locations. So the underlying demand fundamentals are strong. What we've been dealing with in the last 3 years is the negative effects of oil market dynamics as we've run off all the inventory and gone through a very, fairly low volatility period. So, now we think in a similar lull period, but that could end fairly quickly mid-year, and we think that bodes well. And then if you just, again, recap on the supply side, across the product tanker sector now, but MRs in particular, the supply growth for this year, net fleet growth should be 1%, maybe a little less, not a lot more next year. So it's really a perfect confluence of, strong fundamentals and what we think is going to be a very positive oil market dynamic. And what we're not seeing right now are weak rates that we thought we'd see.
Yeah, I mean, let's assume that IMO 2020 has no significant impact on the market. The fundamentals look good. I mean, it's a balanced market. Supply and demand are balanced. Growth in demand is projected 3% this year and next year. So even if nothing happens for IMO 2020, we still have a balanced market, and we have new refinery capacity kicking in, substantial refining capacity out of the Middle East and China, and so things look good overall. And I talked to you, Tony, I guess it was last week or 2 weeks ago. We as you said, we were kind of in an interesting time. March is not usually a period of strength for the product tanker market, but this March it was. And then that was despite the fact that you had relatively heavy refinery turnarounds. And the crude tanker market has been abysmal. And you very rarely, at least for an extended period of time, see those two decouple. And so I wrote a note saying, hey, maybe something is going on here. Maybe there is some early IMO implementations or something. And I got from a handful of brokers, freight brokers. They came back and said, don't get too excited. Things are not as good as they look. I don't know. What do you say to that? What would you say to somebody who said that you're out over your skis? Don't believe what you say.
I think we're seeing underlying fundamental strength, and the party hasn't started yet. That's what I think we're seeing.
I don't really understand that comment. You've seen a consistent increase in forward time charter rates for months.
Yeah.
That's one. Since nobody thought November was going to be as strong as it was, nobody thought December was going to, I'm talking even about us on the panel here. None of us thought that December would be as strong as it was. When we got to December in our analyst meeting, everybody thought that January was just going to fall off a cliff, and it just got stronger. Well, if January was going to fall off a cliff, it was going to be February.
Right.
And then, well, okay, February might be okay, but you know what? Refinery is going to be extended turnaround, and you're just going to get destroyed when it comes to March.
Right.
I mean, I don't know. We're pretty close to the end of, we're approaching that finishing point to the extended refinery turnarounds. And as he said, the demand has been steadily moving up, and that nothing's happened in IMO. Looks pretty good. And the charterers are telling you that. There's so many charterers have taken tonnage in, they've lengthened their books. Way more than any of you guys know or the analysts know, because they're not reporting the length that they've got at the moment. because they keep piling it on.
Can I also ask, is it really important that people believe it or don't believe it?
It takes two to make a market, right?
Yeah. So no, but also, we're pretty positive about things, and investors can make their own decisions.
Yeah.
To that end, I mean, let's take a much more short-term approach.
It's way more bullish that the stocks are trading like crap right now.
Are you?
And another 3-4 months of capital markets shut, the stocks can go up 30-40%. But if these capital markets are shut, which it looks as if they're going to be, you're going to take out 2020 straight away, 2021, and now you're really, really going to extend anything that you're afraid of. You're going to have a very strong period at that point.
Which is probably the best case scenario, right? If I'm one of you guys on the table here, if the stocks don't do anything for 6 months, well, that's fine, right?
It's so much better for us to have a strong to wake up every morning and we're getting cash into the company than to have our stocks trade well.
And if the market goes, let's say for MRs to 25,000 a day, and we're generating on cash flow, and the stock price doesn't reflect that, then we also know what to do.
Right.
So.
Yeah. Let me. I want to leave a little bit of time for questions, but let's say 2 last questions on my end. They're all. Well, pretty much, I think everybody here is a product pure play. At what point does the pure play thing, as a function of price to NAV or whatever, just not seem to make any sense anymore? Or will it always make more sense? I don't know. Any thoughts? Does it make sense to own chemical tankers? Tony, you have a couple of chemical tankers, LPG, crude, whatever.
Just to start off, I think. There's this perception, and maybe it's more historical, that the product tanker sector is quite small and the less interesting kind of younger cousin to the crude business. But in reality, MRs alone represent 1/3 of the world tanker fleet by number of ships. So it's by far the largest sector, and so, quote unquote pure play. I mean, I think that's kind of more kind of an investor-oriented concept. But from a business standpoint, we're perfectly happy to be refining our focus only on 1/3 of the world tanker fleet. I mean, that's a big sandbox, right? So, when it comes to chemicals, I guess ours are simpler coated ships, and we view that there's a very significant convergence happening between products and chemicals, and it's that crossover area which we find very interesting. With easy chemicals and veg oils and things. So it's probably emerging into one big market, and we don't really think that our chemical tankers trade much differently than the MRs. So.
What is your view? I mean, you talk to most investors, and you should know better. What is that?
It's not my show. I think there is, and maybe it's a function of a somewhat downtrodden market, but I think that there is demand for bigger companies.
Pure play.
Well, pure play or not, I think I go into a meeting and somebody looks at the list of 30 different companies that I cover and say, okay, here are the only 3 that I can talk to you about. What do you say after that, right?
So, I mean, historically, I mean, there are at least 7, 8, 9, 10 private shipping people who have personal balance sheets that are way in excess of all our market caps put together. And every one of them are diversified.
Yeah.
So we're only in silos due to the investor convenience, I think, at the moment.
Yeah.
The thought that in that last cycle you had pure plays that was easier for a hedge fund because they were the masters of the universe, remember? How they could then go long, short one particular sector or down a particular sector. I mean, I think that, Sting is concentrating on the products because, that provides the best value there is at the moment in the market. We've already, in a sister company, which was dry cargo, felt last October that the product tanker market provided a better opportunity than the bulk market did in that time, so use that cash to buy into the products.
Yeah.
And yes, everything, we're all Nothing has changed. In the 1980s, was talking about lack of market cap. The same in 2000.
Yeah. Well, I have another one, but I'm going to go ahead. We only have 2.5 minutes left. So are there any questions from the audience that are just absolutely pressing and hopefully funny? No? Pressure's on. Oh, there's one in it. Yeah, just yell it out. I'll repeat it. How's that? Oh, yeah. She's making her way. I can still repeat it, though, if you want.
Thank you. I'm John Korn from SeaWorld. The average age of our fleet is 15 years of age. And just last week, I was getting requests from big chartering or trading houses for 1.5 to 2 years time charter, which is very rare, I think, for an owner of a 15-year-old ship to get that sort of a call, which is a good sign. But I hear in the refinery and production space, terminals are going to start limiting the age of vessels that can call more and more. How long do you think it takes for that community to start limiting to 10 years? I've heard several saying 10 years next year. Basically, how long until the 15-year-old gets aged out completely, if at all?
Clean petroleum products soon. Most of the terminals don't take clean petroleum products at plus 15. But the market's dirty petroleum products, well, they'll take them for much longer. Environmental regulations are just going to continue to get tougher and tougher and tougher. They're not going to turn them back.
So we've had experience trading ships over 15 years of age in this recent tough market, and it's not easy. So you also have to spend a lot of money on them to maintain the standard. So it is problematic. However, when you get into a strong market, the oil companies seem to be willing to ease up a little bit. But I think it's certainly absent that factor. It's not going to get any easier. But I'm not aware of any limitations, serious limitations of younger than 15. Is anybody aware of anything less? It might be for, let's say, longer TC or something. Like if an oil major wants to take a ship in on 3-year TC, they're probably not going to choose a 12-year-old ship. It'll be newer.
But generally, it's a good sign that charters are taking older vessels under, considering that IMO 2020 is coming, and we will see substantially higher prices in bunker prices, especially for low sulfur. So it's a good indication that charterers are not very adamant in taking scrubber-fitted vessels, but they will look at older tonnage with higher consumptions, and that's a good sign.
I think, so, all joking apart, the place I would start is with these refiners. Is look at what they're doing and look at what the traders are doing. The traders are lengthening their books to the market one way or another, whether they're taking his ships in, whether they're phoning him up. Either way, they're saying they think the market will get stronger going forward. That the CFOs and the CEOs and the investor relations conference after conference are talking about the expected demand that they're going to have. At this conference, Scorpio Tankers had a section on what we thought demand for product growth is going to be this year and next year. And we were pretty similar to what you have said, pretty similar to what Anthony's got on his website. And after listening to the first, we were going to go in the afternoon, and we heard the first two guys from the refiners go up in the morning, and we just deleted our entire demand section because it was just ridiculous. It was like, these guys are telling our story better than we could ever tell it at the moment. And there's a real difference between meetings that we have with shareholders who are kind of punch drunk from shipping and people who are investing in the refinery space at the moment.
So I'm out of time, but one last one-word question. A year ago from now, hopefully we'll all be back here. Real fast. We'll hopefully all be back here. What will MR rates be 1 year from now? Tony. Fast.
22,000.
22.
I'll go with that. That's fine for me.
Okay.
I'll go region 20.
20, okay.
Not half as interesting as where LR2 is.
Okay, LR2 is fine. Okay. All right, thank you very much.
Thank you all.